are you still looking for a trading strategy that suits you? And maybe now in 2025, you want to really get started. Maybe your year hasn't started off that well yet. That's absolutely no problem, because today we're going to take a look at how I trade here, specifically with SMC, which stands for Smart Money Concept. We're going to go through all of that together today. Don't worry, you don't need any prior experience for this. That means I'll try to present it as simply as possible so you can apply it to your own trading. And if you like strategies like this or trading videos in general, feel free to leave a like and subscribe for free so you don't miss out on content like this in the future. So let me show you how I traded all of this week, a completely standard smart money concept. We're looking at the gold chart here. I'm doing all of this on the 15-minute chart. No problem. You can also do this on a higher time frame. It works just as well. On a smaller time frame, it also works, but I'd start to be a bit more cautious there. Maybe first, let's quickly go through the theory. What do we need for a smart money concept trade? What do we need for that? Of course, first we need a trend. So let's assume we have a trend here going long. Now you might ask, okay, how do you recognize such a trade? It's pretty simple. Every time a new high is formed here, that BOS, a break of structure, that means the structure is being broken. This happens every time the high is actually broken again. That means up here we have another BOS and so on and so forth. I don't think I need to keep going with this. But as soon as the chart moves in the other direction, so downwards here, we've now broken the low down here, and you might think, well, that's another break of structure, but no, that's not the case, because this is actually a change of character for now. A change of character simply means a change in direction, nothing else. You just need to know these two things. A break of structure always happens when the trend continues in the same direction. And a change of character means, okay, from this point on, the chart could potentially reverse. The problem with this is that, of course, we still want to trade in the long direction. That means for us, this isn't really a change of character. We don't want that at all. Instead, we basically see this as liquidity. So people who have gone long here have placed their stop loss below the last low here. They have their stop loss down there and want to continue trading long from there. So maybe this isn't a change of character at all, but in this case, it's actually a liquidity grab. That means we assume that, okay, this move is just collecting liquidity here before we ourselves enter a long trade again. So we're not really trading with this structure here. No, in SMC, you do things a bit differently. We want all these people to have already been taken out of the market, and that basically happens right here. And then we enter precisely down here in this area. That means from there, we look for another trade and continue trading long from that point. And you'll see it's usually the case that the whole thing then just shoots straight up from here. So to put it simply, that's what a setup looks like. Don't worry, we're going to take a look at exactly how this played out in the chart now. So here we have our first 15-minute candle. By the way, this 15-minute candle looks very bullish here, as we can see, because it closed completely above here. That means, yes, there's a lot of power behind it. So the first thing we need now, if we look here again, is a BOS. That means we go here, we'll just take this over like this and say, all right, up here, the high now needs to be broken, right? That's the last high. So let's see what the chart did here. The next 15-minute candle didn't quite break it yet, but with the following 15-minute candle, we now have our break of structure. So that's it. Perfect. The next thing we need is, okay, we have our break of structure. Now we can go ahead and mark our zone down here. So we go over here and say, okay, down here, this is our point of interest, as they say. In other words, the point or the zone where we're really interested in opening a trade. We don't want to do anything up there right now. We'll just let the market keep running for now. So this is the first move that we definitely need here. How do you recognize something like this? It's an aggressive move upwards, really aggressive, which then immediately takes out the high completely. And if you're unsure and you say, yeah, I don't know, has it broken out or not, then just mark it for yourself as no, the high hasn't been taken out yet. In this case, it has now been taken out. So next step, we wait. Okay, now we're right here on this path, so to speak. We've just moved up here. That means we now need another BOS, so another break of structure, so that the structure continues in the long direction, because we need that liquidity there. It has to be present. So let's let the whole thing play out a bit more. Let's see what the market did here. So it actually moved sideways here. And when you see something like this, it's exactly this area here. That means here we expect a liquidity gap, that it basically takes out this whole sideways movement here, right? So that's really the plan behind it. That means let's extend our zone a bit further. This is what we're expecting now. It hasn't happened yet, but that's what we expect. But what has already happened? If we take another look up here, okay, but we formed a new high again. That means we go over here. Bam, awesome. Another break of structure. So we have a kind of checklist and say, okay, first break of structure, yes. Second, also a liquidity grab that can definitely happen. That means liquidity is below here. What is liquidity anyway? Nothing more than people having their stop loss below here, all the way under this whole area. That means from there, they build up long positions here. And that's basically all there is to it. So all these people get taken out first before the normal movement continues. It's basically like fuel for the chart, giving it another real boost. So liquidity is really, really important. So let's take a look at what the market did next, how it moved up quite a bit more. Now, it came down a bit here. You can see it tested this area again and actually brought new people into long positions, right? I think that's pretty clear because a lot of people are now saying, yeah, let's just take this area and keep trading long from there. You could have taken a quick scalp here as well. That's exactly what I did with my VIP group. We took a quick scalp here, but nothing more than that. Then the whole thing kept moving. And that was actually the reason why it was so critical, because it was exactly the setup. That means people, bam, all got stopped out of their trades here. Those who were so eager to trade to a new high. So now we're coming down into this area, and right now we're exactly in this zone. That means this is basically already our setup. If you compare the whole thing, it's really exactly the same one-to-one as what I just explained to you in theory. So in this area, we can now enter a trade. And of course, there are also different ways you can open a trade here. You can choose the aggressive approach if your setup really counts as an A++ setup for you. But how do we achieve a high win rate now? Right, everyone wants a high win rate, of course. We achieve that by not going overboard with our risk-reward ratio. That's just how it is. That's simply the way it is. Most people, for example, want to go from down here and they say, oh yeah, let's put the stop loss right below here and then set the take profit at least all the way up there. That's usually the rule as well, that we of course trade up to the next high. Because just like here, as you can see, we've analyzed the whole thing with a movement all the way up to the very top, right? What we want is for this high up here to be broken again. That's the theory behind it. I hope you can follow me so far. But how do we manage not to overdo it here? Because in this case, it would almost be a 3-to-1 ratio that you'd be aiming for. So for example, you'd risk $100 here and get $300 up there. Of course, it's great if something like that works out. But what are the chances that something like that will work? Unfortunately, not that high. So the way I do it personally, I actually only trade 1-to-1. A lot of people say you can't be profitable with a 1-to-1, and that's complete nonsense. With a 1-to-1, you have a very high win rate if you know how to use it. And in this case here, when we have such a great setup, you can assume that there will definitely be a reaction to this order block and that you can take the 1-to-1. So let's take a look at what the chart did. One candle and you're already out again. And if you want to get started with trading right away and you're still looking for a decent broker that actually has low fees, a small spread and so on, all the things we traders simply need, then I recommend Vantage to you here. They've been around for 15 years now. I've been with them for 3 years and I'm super happy. So I'm not recommending them for no reason. They have the best fees, the best spreads, and so on. You also get 50% on top of your first deposit. So feel free to take advantage of that. The link is in the video description. That means I'd say you really sat in front of the chart for a very long time. If you think about it, at 4 in the morning, well, maybe you weren't at the chart yet, but in general, it first moved up here. Let's say at 6 o'clock. Okay, then it went even further. 7 o'clock. All right. Let's say you're awake at 7 in the morning. You see the setup and think, awesome, my point of interest is down there and so on and so forth. That means you sat at the chart from 7 o'clock until all the way down here at 8:45. And then with the first candle here, you basically already finished the trade right here. You're already done. Because if we look at the time now, here it's exactly 9 o'clock. That means the London session starts from here. Anything can happen now. It could go down, it could keep going up, or there are many possibilities. If we just let it run a bit further, you'll see that it actually tested the high up here perfectly. So in the end, exactly what we had mapped out here. This is really just a very quick, a quick run through, so to speak, of the trading setup, how it can look, how I really like to trade it, and how I communicate all of this with my VIP group. So if you want to learn all of this as well, if you want to find out more, then feel free to join us in the VIP. There you'll find beginners, advanced traders, and professionals. We're all there, fully involved. Here you can find everything. Either you join the regular basic or you go straight for the SMC masterclass with lifetime access. But lifetime is only available until tomorrow. That is until the 31st of March 2025. If you happen to be watching this video later, unfortunately the lifetime option is no longer available. So if you're watching this video right now and you still want to secure lifetime access, feel free to do so. The course will of course remain permanently accessible, that won't change. But if you're interested and really want to dive deeper, want to learn more about it, and basically want to trade together with who's trading analyses, trading ideas, everything, you'll find it all in our VIP group. So feel free to join us. We're very active there on Discord. We're looking forward to seeing you. So that's it for today's video. If you enjoyed it, make sure to leave a like and subscribe for free so you don't miss anything like this in the future. And with that, I'd say we'll see each other in the next video. Until then, take care. Bye bye.